Hi, folks. Welcome to the Weekend Investing Stock Market Review for the week ending 28th of March, actually, ending of the quarter, month, quarter, and the year as well. Um, let's look at some of the data. From the research desk this week, we had a lot of fantastic stories. India is not going to stop. Important tick changes at the exchange. Capital is your raw material. Sharp corrections and recovery. A primer on that. Liquidity wave. When we short this, the market was not up, but by now the market is up significantly from that bottom. Index, it works like a momentum fund. Do not invest in mid small indices. A thesis on that. uh, US markets, are they overbought? This also, by now the markets have come off. Bhav Bhagwan Che story on that, and commodities are definitely cheap. A comparative story there. So a lot of insights from the research desk are there. Please do make use of all these content pieces. The team works very hard on creating them, and it will be nice if more people are able to make use of them. They are all free and available for use. Do read the disclaimer fully. The regulator is very particular that you all should know what content you are consuming and why. Do subscribe to the channel as well. That is always a permanent ask from me. Nifty 0.72% up this week. Not a great move for the week, but consolidating on that 100-day moving average, which is not such a bad thing. Uh, the 100-day moving average has been resisted a couple of times so far. We've now crossed it and just about maintaining that, which is very nice. Also, for chartists, you can see the slope of the 100-day moving average peaked somewhere in November, and from there it has gone down, and now we are the trajectory of the slope is changing, and it is trying to become flat. So it will take time for it to go flat and potentially go upwards also. On a weekly candle basis, this week was a doji kind of a week, where you can see there is the open and close of the week was at the same point, virtually at the same point, and you had a long wick on the top. Uh, this pivot right here is the key pivot, which we very briefly touched or slightly exceeded and came back. That once exceeded is going to give a lot of fuel to this up move if we go there. The week's candle is a doji candle, which in some if you sort of look at it from a point of view of the meaning of that doji candle, it is a indecision of some sort, but the indecision coming after a very large move uh, potentially may or may not be so potent of an indecision. It just may be a pause. Indecisions, of course, will also happen at tops and bottoms. So this, if we start to come off very rapidly, and the key would be to break this week's low, which is very near where the close is, which may happen as we open on Tuesday, Monday being a holiday. That would, to some extent, maybe say that this is again a short-term top and we are going lower. That is a possibility now that exists. S&P 500 down 1.36% this week. This was as of 10 p.m. on 28th March. I think the market did fall more post that. This is also looking like a weak chart. In the last 5 weeks, rather 6 weeks, we had just 1 week of a very small up move, and you can see the bears have full control over it. Since the Trump trade started, let's say September mid, where it was sure that Trump is coming in, all gains have been erased since then. So, net net, anybody who bet on Trump is now a loser. Gold is up 0.19% this week. We are closing in on 90,000 on INR gold. If you look at this chart, this entire 15 months has been an amazing run. From just 15 months back, we were at 55,000 and we are already at 90,000. That's the amazing part of this run. So, um, always, uh, any chart, any stock, anything that is going up, is always a positive sign till it stops to go up. So always believe in trends and never sort of scoff at things that go up, because you don't know how far they can go. This may go to 100,000, 120,000 in the next 1 year. Who knows? So that's sort of the beauty of the trend following mechanism. Um, Dollar index is falling. We are now slightly below 104 again and looks weak. If it comes towards 100, that will be good news for India also, as some rupee strengthening also further can happen, and more dollar and more inflows can come towards emerging markets than the US dollar. Benchmark index overview. So, a new chart this week. We have Nifty go up 0.72%, Nifty 50 flattish, mid cap slightly down, small caps down 1%, and Nifty 500 also flat at 0.3%. In the last 1 month, we've had some good gains from 6% to 10% across the board. Last 3 months still is negative, but Nifty has pretty much recovered, minus 1% only, 14%, 14.7% on small caps. And over the last 6 months is the most damage, where 10 to 18, 19% damage is there. Last 1 year is very flat now, from 4% to 8% kind of moves over this. Of course, if we go into 5 years, we have fantastic CAGRs across all. So again, uh, while I've beaten this point to death by repeating it again and again, but always look at markets from a long-term view. 1 year, 2 years do not make the market. If you are in the markets, if you are watching your CAGR over 5, 7 year period, you will find that you are making very good compounding returns. Don't focus on the very short term. That's my only request. Nifty sectors. You have media losing big, autos losing big. So autos this week were marred with the tariff news, where 25% tariff has been put on autos going to the US, potentially auto parts as well. That has been the negative news on the auto. Pharma also weak, on the same ground of tariff fear, minus 2.3% there. And others marginally profit taking in real estate, metals, and so on and so forth. Capital markets doing very well at plus 2.4%. Yeah, BSC leading that pack. Just on last session, BSC was up 16% odd. Um, it is going to benefit out of the single day expiry move by the regulator. IT stocks have been flat but overall weak. So over 3 month period, let's say IT has been pretty poor at minus 15%. Real estate has also lost ground in the last 3 months, but real estate was doing well over last 1 year at minus 5.5 only. Over a year, defense and capital markets have still done very well, although in short term, uh, in fact, defense has recovered very well in the last 1 month at 24.6. That is the best sector uh, for this month. And if we see very, very long term, you can see that defense has clocked 65% CAGR for the 5 year period. That's an amazing CAGR for any sector at any point of time. Metals are at 42%. Real estate is at 35%, PSU banks at 36%. And this is also looking very good because 5 years back, almost exactly, it was the COVID bottom. So these are CAGR returns from COVID bottom, and hence they look exceptionally good uh, from that point of view. Nifty sectoral momentum overview. Here we give momentum scores to different sectors, and you can see that financial services has been a top rung sector. It slipped in the middle, but has now come back. Defense had slipped 3 months on 3 monthly basis, but has come back. Capital market has come back very, very smartly. You have PSU banks that are coming up very smartly. You have private banks also that have come back. So you can see which have slipped. So energies has slipped. FMCG is trying to make a comeback here. Metals have slipped very, very recently, and that's sort of the heat map for different sectors across different time frames for the momentum score. You can see there is some very nice consistency of losing in autos in the entire last 1 year, real estate, MNC stocks, and even IT stocks, you can say, along with consumption story. And you've seen that play out in most consumption stocks as well. So these broader trends do paint a very accurate picture going forward. Drop from 52-week high stats. Here you can see Nifty now has only, you can say, 14% or seven stocks which are below 30% in terms of 52-week drop from 52-week high. Largely, the damage is 10% to 30% for about 64% of stocks. In mid cap space, it is more skewed towards 20 to 50%. Micro cap is more skewed towards 30 to 50 plus also. Uh, but you can see here that within the 10 to 20% range, Nifty 50 has the most stocks. Others have lesser stocks here. So large cap is lesser damage for sure. And as we go down the hierarchy, large cap, mid cap, small cap, micro cap, we can see the shift is more towards more damage from 52-week high. Is the trend improving or declining? So very short term trend, the 50-day moving average has improved. Uh, and this is not the 50-day moving average. This is the percentage of stocks of CNX 500 above 50-day moving average. So about 50% stocks are now above 50-day moving average, which is a very good sign. It is uh, very much like the previous move that we had here. The 200-day moving average still has only 20% stocks above it, which is low. And hopefully this turns, but at least you can see, if you see the trend of the 200-day moving average, stocks above 200-day moving average, it has bottomed at some point and it's starting to go up. Same is the case with the 50-day moving average also, which are good positive signs. In the benchmark indices trend check, you can see that let's say 200-day moving average, you have 30% stocks now above 200-day moving average on the Nifty 50. Other segments are low, and this is very surprising that Nifty Next 50 is very low. Only 8 stocks are above the 200 DMA in Nifty Next 50. So this is still pointing to a poor picture, but on a 50-day moving average, significant, almost two-thirds of the stock in Nifty Next 50 or Nifty 50 are moving up fast. So the large cap space is certainly moving up faster than the other spaces. Here we are looking at the sectoral trends. So within sectors, financial services sector has the most. About half the stocks in that sector are above the 200-day moving average. And you can say metals, private banks also has decent numbers, but rest of them are very, very poor. 20-25% is basically one fourth of the stocks above 200-day moving average, which is very poor for that sector. Real estate and energy have no stocks above 200-day moving average, which is also quite poor. But short term is a different story. Energy, commodities, financial services, PSEs are coming up fast. So the curve has started to move up. The prices are above 50-day moving average for almost 80 to 100% in these four cases, and others have just about started. So look out for, if the rally continues, energy, commodities, and financial services. These are the spaces where you'll see winners coming out from. That's sort of the inference one can get there. In the strength and weakness within the CNX 500, you can see the golden cross is up only on 13% of stocks. So 65 out of 500 stocks have price which is greater than 50-day moving average. Sorry, 50-day moving average is greater than 200-day moving average. And absolute strength, where price is greater than 25, greater than 50. So where it moves in unison in terms of the trend. Absolute strength is there only in 7% of stocks, and absolute weakness is there in 22% of stocks. But 87% stocks still have the death cross, where 50-day moving average is below 200. So the trend largely is still very much down. It is only very small pockets that are showing some strength. And until I think the death cross numbers are below the golden cross, the specter of this downtrend re moving towards newer lows will remain. So this is something to be washed out over a period of time, how this develops. These are all statistics that you cannot really use them to take buying or selling decision, but they will formulate a environment, a picture for you in case you want to have that kind of a envelope of information. It gives you confidence also. It may not mean that based on this chart tomorrow should I buy or sell. That is not the intent also. So FIIs on the last day of the week have sold again 4,300 crores. This was not expected actually. So this also may be a signal of that this bounce is over. Perhaps, I don't know. But DIIs, of course, were buying very heavily, 7,600 crores, and it may be a year-end, quarter-end, March-end kind of a readjustment of, and a lot of indices have changed. So I'll do a daily bite on that. So a huge number of shares have come in and gone out of various indices, and that's probably also a reason why significant institutional volume will also happen near those days if you to readjust their portfolios. FII DII numbers are extremely in favor of the bulls. 62,000 crores in the last 1 month by DIIs is the purchase, and only 23,000 crores is the FII sale. So you can see that till mid of March, they were still, polar opposites, but then FII started to buy while DIIs were, went flat after that. So a very good sign, I think, after a long time. I'm waiting to have this number go in the green or in the blue rather. Let's see where we go forward. Do let me know how you like this content. We've tried to change things around based on the feedback. So do give us feedback on the content and how you like this presentation. Thank you. Bye.